Everyone's saying the petrodollar just died. I spent 12 hours reading the actual Saudi oil contracts. What I found? Completely different story. Here's the thing. The headlines say Saudi Arabia ditched the dollar for Chinese yuan. I went through Saudi Aramco's actual trading data, cross-referenced it with SWIFT transaction reports, even pulled IMF reserve currency numbers. What everyone's missing is honestly wild. If you've got investments tied to the dollar, or you're worried about inflation getting worse, this breakdown changes everything. Because the panic? It's based on a misreading. The real story has three parts everyone's ignoring. What I found at minute 6, that's the part that actually matters for your money. But first, you need to see what Saudi Arabia actually agreed to. So the story goes like this. March 2023, Saudi Arabia announces yuan oil deals with China. Financial media explodes, petrodollar dead, dollar collapse imminent, America's reserve currency status ending. The fear is real, because for 49 years, since 1974, Saudi oil only sold in dollars. That deal? It's what made the dollar the global currency, or at least that's what everyone believes. Look, I get why this sounds terrifying. The petrodollar system meant countries needed dollars to buy oil. That created massive demand for US currency. It let America print money without the usual inflation consequences. The ultimate economic cheat code. Think about it. Every country that wanted to buy oil had to first buy dollars. That meant constant demand for US currency. It meant the Federal Reserve could expand the money supply way beyond what would normally be safe. It meant America could run massive trade deficits without the dollar collapsing. So if Saudi Arabia breaks that deal, game over, right? The whole system collapses. That's certainly what the headlines want you to believe. Here's the first problem. There was never a formal petrodollar agreement. I went looking for the actual 1974 contract. It doesn't exist. Seriously, I searched through government archives, treasury documents, diplomatic cables. Nothing. What happened was way more informal. After the 1973 oil crisis, the US and Saudi Arabia made a handshake deal. Saudis price oil in dollars, US provides military protection and buys Saudi debt. No expiration date, no formal treaty, just a mutual understanding between two allies. This is crucial because it means there's nothing to expire. When you see headlines about the petrodollar agreement ending, they're talking about something that never formally existed in the first place. So when you hear petrodollar deal expired, that's already misleading. Nothing expired because nothing was formalized. The relationship evolved organically based on mutual interests, not legal obligations. But okay, even if it's informal, did Saudi Arabia actually ditch the dollar? Here's the first red flag I found, and this is where things get really interesting. Let me show you the actual numbers. In 2023, Saudi Arabia sold roughly $350 billion worth of oil. Guess how much was in yuan? About 15 billion. That's 4%. Let that sink in for a second. 96% still in dollars. Now here's what's interesting. That 15 billion? It's not even new. Saudi Arabia has been doing yuan oil sales since 2019. They've been slowly diversifying for years. This isn't some sudden shift or dramatic break from the past. The March 2023 announcement wasn't a change. It was just an announcement, literally restating what was already happening. They basically said, hey, we're continuing this thing we've been doing for 4 years. But the timing made it newsworthy. So why did it blow up? Timing. It happened right when US-China tensions were peaking. Trade war rhetoric was everywhere. Everyone was primed for dollar collapse stories. The media ran with it because it fit the narrative of the moment. But the substance? A 4% diversification that started 4 years earlier. That's the first piece everyone got wrong. The story isn't wrong exactly, it's just wildly overblown. And here's another thing nobody mentions. Other OPEC countries have been accepting non-dollar payments for even longer. Russia's been selling oil in euros and yuan since 2016. Iran has been forced to use alternative currencies because of sanctions. This isn't revolutionary. It's been happening gradually across the entire oil market. The real question isn't, did this happen? It's why does 4% feel like the end of the world? Okay, but here's what you're probably thinking. Sure, it's only 4% now, but isn't this the beginning? Won't it grow to 10%, then 20%, then 50%? Fair question. Let me show you why that's harder than it sounds. Here's something nobody talks about. The entire oil trading infrastructure runs on dollars. I'm talking about SWIFT payments, futures contracts on NYMEX and ICE, hedging instruments, letters of credit, insurance contracts, derivatives markets, all dollar denominated. This isn't just about currency, it's about a massive ecosystem built over 50 years. Every major oil company, every trading desk, every futures contract, every hedging strategy assumes dollar pricing. The software, the contracts, the legal frameworks, everything. To switch to yuan at scale, you'd need to rebuild this entire system from scratch. And I mean literally rebuild it. New exchanges, new contracts, New legal frameworks, new software systems, new insurance products. China's trying. They launched the Shanghai oil futures in 2018, yuan denominated. They want to create an alternative to the dollar system. 5 years later, it handles about 12% of China's oil imports. Not global trade, just China's imports. And even that is struggling with liquidity issues. The problem is liquidity. The dollar oil market is massive. Trillions in daily trading volume. Deep liquidity means you can buy or sell huge amounts without moving the price. The yuan market? Thin, illiquid. Hard to trade large volumes without massive price impacts. Here's the deeper issue. Say you're a Saudi oil exporter. You receive yuan. What do you do with it? This is the question nobody asks, but it's actually the most important one. China has capital controls. You can't just freely convert yuan to other currencies without going through official channels. You can't easily invest it globally. You can't buy US bonds with it. You can't diversify into European assets easily. The yuan is not freely convertible. The dollar? You can do anything with it anywhere. Buy bonds from any country. Invest in any market. Convert to any currency. Park it in the safest assets on earth. Move it instantly anywhere in the world. That's liquidity. That's power. That's the actual power of the petrodollar. Not just that oil is priced in dollars, but that dollars are the most liquid, most useful, most versatile currency on the planet. Even if you want to move away from the dollar, the practical reality is that the dollar is just more useful. It's not about politics or power. It's about practical utility in the global financial system. Stay with me, because this next part is crucial. Even if you ignore all of that infrastructure stuff, there's a third factor. And honestly, this one shocked me the most when I dug into it. Here's the biggest misconception. People think the petrodollar is why the dollar is strong. Like the foundation of dollar dominance is oil sales. I pulled the actual data on this, and it completely contradicts the popular narrative. Global oil trade? About 2.5 trillion annually. Sounds like a lot, right? Total dollar transactions globally? Over 6 trillion per day. Not per year, per day. Let me put that in perspective. All the oil traded in an entire year represents less than half of one day's dollar transactions. Oil is less than 1% of daily dollar usage. Less than 1%. The dollar's dominance comes from something else entirely. 63% of global foreign exchange reserves are held in dollars. 88% of foreign exchange transactions use dollars. The US has the world's biggest bond market, over $40 trillion, the most liquid stock market, a legal system everyone trusts. Countries hold dollars not because they need to buy oil, but because dollars are useful for everything. Trade with any country, park money safely, invest in the deepest markets, access the best legal protections. Here's what really blew my mind. I found research from the IMF that nobody talks about. They modeled what would happen if OPEC completely stopped using dollars. Not just Saudi Arabia, everyone. Zero oil in dollars. Worst case scenario. Impact on dollars value? 2-3% decline. That's it. Not 20%, not 50%, not collapse. A modest, manageable adjustment in dollar value. Why? Because oil demand for dollars is actually a tiny fraction of total dollar demand. Most dollar demand comes from bond markets, currency reserves, international trade in goods and services, and financial transactions. Think about Apple selling iPhones globally, Amazon shipping products worldwide, Boeing selling planes, Hollywood selling movies, software licensing, patent royalties, financial services. All of that creates way more dollar demand than oil ever did. The petrodollar narrative has the causation backwards. The dollar isn't strong because of oil. Oil is priced in dollars because the dollar is strong. It's the most liquid, most trusted, most useful currency for global trade. Oil just followed that reality, because the petrodollar was never the foundation. It was one brick in a massive structure. An important brick, sure, but not the foundation. So here's what's actually happening. The petrodollar isn't dying. It's slowly diversifying, which, honestly, has been happening for 20 years. This isn't new, this isn't sudden. The euro, the yen, now yuan. Countries have been gradually moving away from dollar exclusivity for decades. But moving from 100% to 96%, that's not death. That's evolution. That's the natural result of a multipolar world. The dollar remains completely dominant, not because of oil, but because of institutions, liquidity, and trust. None of that changed in March 2023. None of that changes with 4% yuan oil sales. Here's what people don't understand. Currency dominance doesn't require 100% usage. It requires being the default, the standard, the most useful option. The dollar is still all of those things. Even if human oil sales grow to 10% or 15%, that doesn't end dollar dominance. It just means more currency diversity in one commodity market. The dollar has survived way bigger challenges than this. For your investments, the dollar crash trade is overblown. Yes, the dollar might weaken gradually over decades, But not because of oil deals, because of debt levels and fiscal policy, because of political dysfunction and monetary expansion. Those are the real risks. If you're betting on dollar collapse because of petrodollar headlines, you're betting on the wrong catalyst. The real threats to the dollar are domestic, not external. Federal debt approaching $35 trillion. Annual deficits over $1 trillion. Political gridlock preventing fiscal reform. Those matter way more than Saudi oil deals. For inflation, this changes nothing. Your grocery prices aren't going up because of UN oil sales. They're going up because of domestic money printing. The Fed's balance sheet expanded by trillions during COVID. That's what drives inflation, not what currency Saudi Arabia uses for 4% of its oil sales. The Fed's balance sheet matters way more than petrodollar headlines. Money supply growth matters. Fiscal deficits matter. Labor market tightness matters. When oil sales? Basically irrelevant to your daily inflation experience. For geopolitics? Okay, this is actually significant. Not economically, but as a symbol. China is building alternative systems, payment systems that bypass SWIFT, currency swap agreements, digital yuan infrastructure. This is real. Slowly, over decades, that could shift power dynamics. It represents China's attempt to reduce dependence on dollar-based systems. That's strategically important. But strategic importance doesn't equal imminent economic collapse. Just not in the dramatic way headlines suggest. This is a slow-motion shift that might play out over 20 or 30 years, not a sudden crisis that matters to your portfolio next month. But here's the part that genuinely shocked me. The people pushing the petrodollar collapse narrative, a lot of them are selling gold or crypto, or courses on dollar collapse survival, or newsletters about the coming crisis. I started tracking this. I looked at who's writing these articles, making these videos, pushing these headlines. There's a pattern. Many have financial products tied to dollar collapse narratives. I'm not saying they're wrong about everything. I'm not saying they're being deliberately dishonest. But the financial incentive to panic is real. Fear sells. Nuance doesn't. The petrodollar is slowly diversifying, doesn't sell gold coins. The dollar is collapsing, does. This is important because it explains why the narrative is so extreme. It's not just about the facts. It's about what sells. And panic sells better than measured analysis. So what does this mean for you? Look, I can't give financial advice. I'm not telling you what to do with your money. But here's a framework for thinking about this stuff. 1, check the source. Is the person making the claim selling something? Are they affiliated with products that benefit from the narrative they're pushing? That doesn't make them wrong, but it's worth knowing. 2, look for actual numbers. Petrodollar dying versus 4% UN sales. Those are different stories. One is emotional, one is factual. Always ask for the underlying data. 3, time horizon matters. Yes, dollar dominance might decline over 30 years. That's not the same as imminent collapse. Long-term trends and short-term crises are completely different things requiring different responses. 4, multiple currencies can coexist. The world doesn't need one reserve currency. History shows us periods with multiple reserve currencies. British pound and US dollar coexisted for decades. It's not binary. It's not dollar dominance or dollar collapse. These questions don't tell you what to invest in, but they help you separate signal from noise. They help you avoid panic-driven decisions based on misleading headlines. Here's my honest take. The petrodollar narrative has some truth. Dollar dominance is slowly declining. Multipolarity is real. More countries are diversifying away from dollar exclusivity. That's happening. But the March 2023 Saudi announcement, it's not the smoking gun. It's not the catalyst. It's not the beginning of the end. It's a continuation of trends that started decades ago. The sky isn't falling, but the landscape is shifting. Those are both true. The dollar will probably decline from, say, 63% of reserves to maybe 50% over the next 20 years. That's significant, but it's not collapse. My position? The petrodollar death is massively overstated. 96% of Saudi oil sales still in dollars. Global oil trade is a tiny fraction of dollar usage. Infrastructure to replace the dollar doesn't exist yet. The alternative systems aren't ready. Could it change? Over 20 to 30 years, maybe? China might build out viable alternatives. Digital currencies might change the game. Geopolitical shifts might accelerate diversification. But that's geopolitical evolution, not economic collapse. The evidence just doesn't support the panic. And I didn't expect that when I started researching. I thought there'd be more substance. I thought maybe the concerns were valid and I was missing something. But when you dig into the actual numbers, the actual infrastructure, the actual usage patterns, it just doesn't add up. But here's the real question everyone's missing. It's not, is the petrodollar dying? It's, why are we so eager to believe it is? What does that say about trust in American institutions? What does it say about confidence in the economic system? What does it say about our collective psychology right now? That's the more interesting story. The fact that a 4% diversification becomes dollar collapse in the headlines tells you something about the current mood. People want to believe the system is fragile. People want to believe we're on the edge of major change. Maybe that's because the system feels fragile domestically. Political dysfunction, wealth inequality, inflation, debt. People see real problems and they're looking for explanations. Petrodollar collapse provides a simple, dramatic explanation. But simple, dramatic explanations are usually wrong. Reality is messy, complicated, and gradual. Here's the framework I use. When you see a headline about economic collapse, ask 3 questions. 1, what's the actual data? Not sentiment, not predictions, not what people say is happening. Numbers. What percentage? What volume? What changed from last year? Actual hard data. 2, what's the time horizon? Is this a change over years or decades? Short-term crisis or long-term trend? The response to a crisis is different from the response to a trend. 3, who benefits from this narrative? Who's selling something? Who's raising their profile? Who's building an audience? Again, that doesn't make them wrong, but it's context worth having. Those 3 questions filter out most of the noise. They won't tell you what to do with your money, but they'll help you think clearly. And honestly, that's more valuable than any specific prediction. Remember at the start when I said I read the actual Saudi contracts? That's the move. Check the source documents, not just the headlines, not just what people say about the documents, the actual documents. Look, the global financial system is changing. It always has been. But change isn't collapse. Change is constant. The dollar replaced the British pound as the dominant reserve currency. That took 40 years. It was gradual, messy, and less dramatic than people expected. We've had multiple reserve currencies throughout history. The world adapts. Markets adapt. Countries adapt. It's not smooth, but it's also rarely catastrophic. I'm here to cut through the noise, no hype. Just data and honest takes, even when it's less exciting than the headlines, even when it's more complicated than a simple story. If you want more myth-busting like this, subscribe. I've got 3 more dollar myths to destroy next week, starting with the BRICS currency panic. Because, yeah, that's another one that sounds scary until you look at the actual numbers. We'll dig into whether BRICS can actually create a unified currency, what the real obstacles are, why 2024 announcements don't mean what headlines claim, and what it actually means for the dollar. Stay skeptical, check the data, think clearly. That's how you survive in a world of financial noise.